following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to John in Austin, Texas. Hey, John, what's going on?
Hey, buddy.
How you doing, man?
I'm so good I can't stand it. How about you?
Good, man.
God bless you. All of God's best to you and your family.
Wow.
You teach us how to make money. You are such a man of integrity and honesty.
Right.
I so admire what you do in your show, and you just deserve a whole lot of credit. And the other thing is you would be hard-pressed to invest in something that's going to bring you a better return than that gold report. It is fantastic, buddy. I just so appreciate you helping us make money.
I appreciate it, man.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. If you're traveling over this great Christmas and New Year holiday, folks, please make it a safe one. Be strong. Go with your heart and believe in miracles, because anything can and will happen. Market-wise, let's take a look at it out here. We have the Dow Industrials up 165, NASDAQ up 39, S&P's up 19, gold contract down $5.60, trading at $1,068 an ounce. Silver down a penny at $14.29 an ounce. Platinum down $3 at $8.69 an ounce. Copper up 2 pennies at $2.12 a pound. Light sweet crude up $1.47, trading at $37.61 a barrel. Bonds, the 10-year down 5 ticks, 126, 30 off 28, 154.06. King dollar up 161 ticks, trading at 98.40. The euro is down 47 at 109, and the yen is trading 120.86. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? We take a look at the SPY. SPY today, we're at up 232. You've done 78 million shares. Yesterday, we do 111 million shares. We come downtown on 173 million and 251. Bottom line, no doubt, they're pushing light volume. We have a high volume swing low. I suspect what you're going to see right after the new year, more than likely, we're going to be right back down into those lower levels, meaning into the 199, as well as the benchmark out here is the October 2nd high, which is 195.03. We look at the NDX 100, the Qs. What do you have with the NDX 100? Same type of setup. The NDX itself, the Qs actually is showing more weakness in correlation to the other indices. And what you have with the NDX is this. You come down on 45 million shares. You come down on 53 million. We went up Monday with 26 million. Yesterday was 26 million. And today we're going to do about 20 million. Bottom line, doesn't have the strength. We'll be right back downtown. Inside the Dow Industrials, the strength versus the weakness. That's what you have. There's only 2 stocks that are negative. Nike is down $3.28. Disney is off $1.02. The strength of the oil stocks, you have Chevron up $3 at $93.35. ExxonMobil's up $2.22. If we go over to Nike for a second and take a look at Nike, this is pretty amazing what is going on with Nike. Nike opened at 136, just sold off. We're at 128. Bottom line is that this thing is, that sell-off's pretty extensive. So that sell-off, even with Nike, is saying that now its game to Nike is down to 115.63. So that's going to be something to keep your eye on, because Nike, no doubt, has been the leader out there. Also, the numbers that Nike had, folks, were dynamite. They were great numbers. They were growing by 20%. Market still didn't. Market was looking for more. That's the bottom line. Gold contract. What do we have with gold? Gold's pulling back. Light volume. 62,000 contracts. That's after going higher on Monday with 122,000. Higher December 4th, 209,000. That's still setting up for higher prices. Bond market. What do we have with bonds? The bond market, folks, is the ever-ready market. It's just pretty amazing. Bonds rejected lower price out here today. Had lighter volume. The 10-year is at 126.01. And, you pull back today with 420,000 contracts. You're pulling back into 1.5 million. Bonds want higher price. The last swing high in bonds, December 11th. That's 127.10. That's the 10-year we're talking. The closing high is 128.26. So we're only 3 points away from the closing high, which is just amazing. The 30-year, we'll take a look at the 30-year. 30-year bond out here, we're at 154.08. It's done 128,000 contracts today. That baby is coming into 385,000. Bottom line, bonds also want higher price, which is absolutely counterintuitive into the aspect that we know that the Fed has gone up and they plan on going up again. Let's go to our man Alex in Boston. Alex, what's going on?
Hi, Tom. How are you doing?
I'm doing great, man. Yourself?
I am doing very good. Happy holidays to you and your family.
And to you, Happy New Year. Great to hear from you, man.
Yeah, and it's a crazy hot here. I had to turn AC today in Boston.
You had to put the AC on in Boston. That's a classic, man. I think that's a first in December. Seriously.
Yeah. So I want to talk about what I see as a classic long-term trend reversal. And if we can take a look at MLPs.
Yeah, let's take a look at it.
Especially the symbol is K. The King YN.
Yeah, this is cool. It might have been your email I got. I just got an email on this. Okay, so so it's it's Kane Anderson MLP. So it's not...
I bought it yesterday because it broke this 3-day consolidation.
Okay, so let's take a look at it. So the stock is trading right now at $16.76. It's been, like the rest of these MLPs, it's been on a one-way track. This thing, came down from $37 into $12. Okay, so... Okay.
On the monthly chart, it looks scary, but...
listen, they have to start bottom or somewhere. No, I agree. There's no doubt. What happens, folks, is that you're looking for a test of the lows with light volume first, which this had. Okay, so your high volume spike, $13.44, even on the daily would have been 3.1 million. You tested it with 2.5. That's 600,000 less, which is that's almost 20% less. Then the first day you had some strength, not much price movement, but there was strength there. Someone was buying it on December 18th. We did 2.8 million. You had strength yesterday, 2.9. You had strength today. Yeah, you got action here, man. I mean, the key with an expansion like this, okay, the last big expansion you had is that, let's see, September you went from $21 up to $26, so that was a 20% move and then gave it up again. What you want to do with it, Alex, is this. Yeah, you can ride it up, but if you see volume expand on the way when it starts retracement, then just take your bread, man.
Yeah, but take a look at the yield on this one. It's 15%.
Yeah, that won't stay there. Stay right there. We'll come right back. That will not stay there. This is Tom O'Brien. This is TFNN. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We're talking with Alex, and we're talking about KYN, which is a MLP pipeline company. And we're just talking about the dividend yield. So what you're looking at is that I can see it's 15.64.
They just cut it.
They just paid it?
No, they just cut it to 9.6.
Oh, they just cut it to 9.6. Okay. And when was that?
A few days ago.
Okay. Okay. Okay, well, maybe you can stay at 9.6. When I look at this, and you look at, so what this actually is, now this is pretty interesting. This company here is not the, the pipeline. What this company does, folks, would be like you and me just making a portfolio, and they just buy pipelines. So when I was looking at this, Alex, right, I looked at a couple of these, I says, hold it. I know that Kinder already cut theirs by, they cut theirs by 90%. So if they're banking on that coming in, that's not coming in. Do you know what I'm saying?
Yep.
So what you could do, you could go through the rest of these and say, okay, I suspect if they already just cut it, I can't picture them cutting it again like quickly, but, a 9%, yeah, maybe they'll pay that, maybe they won't. It depends on how much further these go down. If oil starts going up again, then you can have a shot at it for sure.
So I'm already 15% on this stock since yesterday.
Oh yeah, well yeah.
Should I take some profits or?
No, I wouldn't take anything just yet. This can. So ICE on this is like $17.45 to $18. I mean, this thing hasn't bounced. The last time it went from $24 down to $12 without a bounce. So you can get a good bounce, man. Yeah. No, I'd stay right there.
Okay. And the last thing, I suggest you to go to the website www.sunscience.org, and you will find the Tiger Horoscope 2016 for finance. That's very funny.
Sunscience.org? Yeah.
Science.org.
Perfect,
yeah.
Man. I'll be there as soon as I get off. I love it, man. Thanks, brother.
You take care.
You too, man. Because it's wild, folks. I was born in November, so I'm a Scorpio, but I was born the year of the tiger too. Now, folks, let's go over to our man, Mr. John Logan, who kicks us off at TFNN every trading day, 8 o'clock in the morning. Has an outstanding program. No matter where you are, folks, in the world, you can get us right on your cell phone, tfnn.mobi. Gets to the audio. You want to get the video, you go to tfnn.com. You'll see Watch Tiger TV on the right-hand side. You can hit that. Bottom line, you'll bring up Tiger TV. You'll see the audio plus the video. As John kicks us off every morning, you're going to see a great piece of software that he uses that you can also use right here, right now. It's the Taz Profile Scanner. Come over to our website. You can test drive it right now. 14 days, absolutely free. John Logan, what's going on?
Hey, Tom, how are you?
Ho, ho, ho. Merry Christmas.
Merry Christmas to you. God, man, these, can we talk S&P, dollar, notes, and
absolutely.
Crude oil?
Sure.
Let's do it. Let's do the big four real quick.
Okay.
Got the S&Ps. We talked this morning, waiting patiently until we got up to another inflection point if that was going to happen, or get them below the 2025 area. So the 2025 didn't happen, but we're coming right up into this 2057 area. If you can see this on my charts right now.
We can see it. Yes, we can.
Yeah, I mean, what is this? How many days in a row have we had a 100-point down move?
Yeah.
It was like 7 or 8.
Yes. No, big time. Yeah.
Yeah. We've had some volatility. And what I want to say here is, we try to wait patiently to try to pick battles around these inflection points for you traders out there. For investors, it's been a crazy, crazy past week or two. But guys who are trading, we always wait. We always look at our breadth calculations. I mean, the weekly has just been, barely getting positive here. And that is really not enough positivity, if you will, to really get excited about, hey, we're going to blow through another level. I mean, I think this is just a trading opportunity on the short side now. I know you're a little short-minded yourself. So I'm looking at this as thank goodness we rallied up to another inflection point that we can kind of whack on the short side again on the S&Ps.
Yeah.
And like you said earlier, the note bond situation. What is that really predicating moving forward? I mean, it's I know it's a little bit of a rigged game with Yellen coming out with the comments and just doing that token quarter point raise, but in the broad sense of things, I think the bonds and the notes, as in the past, have usually predicated some things that maybe a little off when situations like this happen for the broad market in general, being the stock market. And
there's no doubt. It blows my mind, folks, that the bonds continue to still want higher price, but, they're not backing off. It's like, okay. I saw an article on Bloomberg yesterday, though, that I'm starting to wrap my head around. And what it was about, folks, it was about the aspect of how the Fed's going to keep rates, or they plan to keep rates, it's in the repo market. And so they had a chart, and looking at that chart, folks, what happened is that they were practicing this, by the way, for the last year and a half, and now it's a real deal. And the practice runs, what's happening is that they will practice it at the end of the quarter, okay? But the bottom line is that once they started it, they started practicing because they knew they'd have to do it at the end of the month, right, to keep it going. Mm-hmm. Well, what ends up happening is that they suck up all the supply. And right. So bottom line, when you look at this chart, folks, you're going to see at the end of the month, in order to keep the rates where they want to keep them, the Fed is sucking up the supply. If they suck up the supply, guess what? That means that rates will stay low. So I know it's wild, man. I mean,
it's a heck of a situation. I mean, that whole relationship is kind of seemingly a little disconnected at times with the notes and the bonds and the U.S. stock market.
It is.
Yeah, but that what is it really long-term foretelling right now is my question. But again, as these S&Ps have kind of elevated up in those lower time frame breadth speed dials that you love, have kind of been in positive mode. I mean, we're getting into a major area again, 2057.
Yep.
And that weekly breadth situation really is not saying, hey, it's time to put on your long pants and let's all load up here. I mean, this is something, in my opinion, to just kind of take some trading shorts against right now.
So when you test drive the software, folks, when we was talking about the breathometers, totally.
I'll have to use that.
Totally. What you're going to see is that there's 4 of them. There's a weekly, there's a daily, there's a 240-minute, a 4-hour, and a 1 hour. Bottom line is that what you're going to see is that, and I've been watching that weekly pretty closely, because at the beginning of yesterday, the weekly and the daily were in negative, and now, as John said, we had some juice yesterday, juice today. It's going into the positive. What's cool is that whether you're a bull or a bear, it's where you want to set up trades, folks. That's what it comes down to. It's a probability business, and you're going to take the shot at it. Do you know what I mean? So
yeah, if you'll notice, Tom, well, let me spread this back out. If you'll notice, the most of the stocks in the S&P, even with this volatility, have been in the balanced area, and that balanced area actually seems to increase. And we can talk about that.
Are you going to stay with me? Okay, one more. I know you're going to go Christmas shopping. One more segment. We'll do some Christmas shopping.
Okay.
Cooking, brother. You stay right there. Thanks so much, man. You stay right there, folks. John and I are coming right back. Dow right now is up 164. Nasdaq's up 38. S&P's are up 19. We're going to be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now is up 162. Nasdaq's up 37. S&Ps are up 18.5. And we are talking with our man, Mr. John Logan. So this is a great time, folks, of the year, period. Great time because all of us may have a little more time to basically get some stuff done. If you do, come on over to our website at TFNN, test drive the scanner. John's put some great videos together with it. You're going to be able to wrap your head around it. You're going to see how powerful it is and see how that can help you each and every trading day. Okay, so what am I looking at here? Ooh, yeah, baby.
So we were just finishing up with the S&Ps, and I was just saying that, this. might be hard to see for everybody.
No, we can see it. It's
okay.
clear. Yeah, it's clear.
This blue line, which is our middle ground,
Yes.
like the amount of stocks that are balanced within the S&P 500 right now as we speak are 236. That's almost half the stocks, about 47%, and that actually number keeps climbing. So what that means to me is that, you know, we're still in kind of balanced mode, even though the volatility is really high.
Yes.
I've gotten chopped up a little bit trying to short or go long this thing lately. I'm not going to lie to you. It's just been kind of insane, the moves that have happened lately. But the thing I think everybody needs to keep in mind is we don't have a lot of these, you know, converting type mechanisms going on that where we're going to just say, okay, yeah, you know what, even though we're just a smidget positive on our long-term breadth right now, that's not exactly that big of an impact to say that, because the middle ground that we're showing, it keeps increasing, and it's actually kept increasing during this volatility. So what does that mean? That means that most of the stocks in the S&P 500 are just wanting to rattle around in the balanced area. So I don't really have a lot of reservations when it comes to shorting an inflection point of big magnitude like this 2057 area. You know,
Yes.
I mean, this is kind of cool timing too, because I mean, well, my goodness, we've had a big run up, but
well, I think it's great timing. I mean, I happen to love the idea that it's bouncing on light volume myself. You know what I mean?
Yeah.
So
That's another good idea.
that's what I'm kind of looking for. So.
Can we talk oil for a second?
Absolutely, man. Yeah.
All right. Because these are the things that drive markets. I mean, we're talking, you know, dollar, oil.
No doubt. Inside
bonds.
the Dow today, it's Chevron and Exxon. That's the juice in it. Those are 2 leaders.
Yeah. We talked about oil this morning. I'm just going to go to the February contract now, and you know, we talked about, okay, we were in no man's land a little bit. I mean, the trend has been down for guys who are looking to, you know, get on the long side of this and trade against the long-term trend down. You had some indications on the scanner this morning. We talked about that a little bit. I'm going to go back into my futures section here and go up into WCI crude oil, and as you can see, we basically have been in a long-term short kind of contra trend up north phase for 45, 60-minute bars. That's what that's saying.
Look at that, yeah.
Yeah, and we had the green shoots and all that kind of jazz, but we're coming up into right now the neighborhood of that, again, just like the S&Ps, we showed that 2057 area.
Daily, yeah.
We have 37, 62, 38, that general neighborhood there. Now we've got to contend with. So, you know, I don't want, you know, everybody out there, it's like, oh, God, I got to get on the old bandwagon here. We've actually got a lot of headwinds in this general area. If we close above the 37.62 area, that's going to be kind of a big deal. But I mean, this is basically just popping our head up in a downtrend. We're hitting resistance. I don't want everybody out there to get too drunk on getting long crude oil right now.
What's so cool about the profiles that we're talking about, folks, is that these are not subtle numbers. Those, you know, they're hardcore numbers, which is really cool, really. Do you know what I mean?
Oh my, yeah. I did a presentation for a big Thai broker last night called DBS Vickers. They're the largest broker in Thailand. They're adopting this product because it, you know, well, for one thing, they love it because you can basically look at the globe really quick, like I'm showing right now, relative to this information. You can't get it anywhere else. And it makes things really, really black and white for their customers.
Right.
So, you know, this is something that, again, it's got a lot of global appeal. And I really think the guys out there who are looking at this show and trading their own accounts could benefit from the same way a lot of institutions do, using the same information.
There's no doubt. You know, and I heard you when we were talking about just how lucky we are in the U.S. markets compared to other markets, you know, because what happens, folks, is that the spreads are bigger in other markets. There's a lot of different things. Now, that being said, there's probably always also some nice opportunities. When I was listening to you, John, I says, "Oh man, that gets interesting, doesn't it?"
Yeah, I wanted to hear you use that term, opportunity, because that is the key. I mean, when I was in Board of Trade, I mean, I had a partner up there. He'd go chase the latest discombobulated marketplace, whether it was in London, Singapore, whatever.
Yeah.
Physically go there, trade it till the arbitrage situation got it, you know, efficient, and leave.
That's what you have to do. I know, man. Yeah. That's a fact, folks. What happens, folks, if you've never been in a market like this, and I know most of you haven't, because what we're talking really is not necessarily a professional market. When the doubles and the triples started, that's how the doubles were. Pro shares, that's how Pro shares was the first 16 months. If you were used to trading futures, I used to trade the futures off of the Qs and the SPYs, and then of course then everyone caught on and it gets tied up again. I mean, that's just how it goes.
Well, how about this one? The guy I was partners with in the board of trade, he had just come back from London on the LME, and they had actually he was given it was when the Germans wanted all their banks to actually trade their treasury products through a new exchange called Eurex.
Okay.
Right? And they said, okay, Larry, we'll give you a chance to be the market maker on our new Eurex product, and by the way, the banks have to deal with you. So he would be five ticks wide all the time, bid and offer, and then all he'd do is get filled and arbit off on the floor, and he made like $20 million really quick, taking on zero risk for 6 months, and it was a government forced situation.
Oh my God, that's
by German
sick.
banks to basically trade with him, no matter how wide the spread was that he made, and then then people come in and all that. But he was like, man, it was like shooting fish in a barrel.
Oh man, that's
it was
sick.
just inefficiency and opportunity. Like
no doubt, man.
Yeah.
No doubt. Well, listen, man, you have a hey, I think are you going to be on tomorrow morning?
If I'm supposed to, I will be there.
You are a trooper, man. It's a beautiful thing. Thank you. Because the market's open to 1 o'clock tomorrow, folks. So we will have basically programming for you. You are a trooper, man. Hey, listen, man. Have a great one. Have a safe one. And of course, I look forward to the program tomorrow, man.
Thanks, buddy. You too.
Okay, man. Take care. Bye-bye.
Yeah. Bye.
And what does happen tomorrow, folks, market's open till 1 o'clock in the afternoon. Of course, let's see, Christmas is the following day. We'll get going again, of course, Monday morning going into 2016. 2016, isn't that a mind blower, man? 2016. Oh, boy, that is absolutely just, it's hard to believe, actually. But bottom line, we're going to be out here growling and prowling with you. And what I did do, there'll be my program tomorrow. It is going to be broadcast. I actually did a program for 1 hour. And what I did is that I did where the indices are right now, what I was looking at price and volume-wise, and what I was looking at as to where I expect they're going to be going. So over the weekend, you can check that program out at TFNN. Dow Industrials right now up 148. NASDAQ is up 34. S&Ps are up 16. You stay right there, folks. We're going to be coming right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Dow right now is up 169. You get the Nasdaq up 38. S&Ps are up 18. Let's go to Dan in Philly. Hey, Dan, what's going on?
Hey, Tom, how you doing? Merry Christmas.
Yeah, Merry Christmas to you. How you been, man?
So far, so good. Everything is beautiful. It's like 60 degrees here.
I heard. We just got a call from Boston, and Alex has his air conditioner on in Boston. That's pretty sick, man.
Yeah, I hear Christmas Day is going to be like 65. That's nice.
That is cool. No doubt. No doubt, man. That's totally. I don't think I remember a Christmas at 65 when I lived in Boston, which I lived in Boston for like 45 years. So that's pretty intense.
That's correct. Yep.
Amazing. What are we going to look at today?
Harmony Gold HMY. I own it at around 80 cents.
Okay, let's take a look at it. You got Harmony Gold. The low for the year is 53 cents. The high is $3.10. And there's no doubt this baby has action, folks. So we take a look at this. We also own this in the gold report. It comes off now. If we take a look at a long-term picture of this, what you're going to see is that the stock got smoked. It was a one-way trade since May of 2011. It was $15. Gets down, down into my God, that 53 cents. It comes off that level, folks, and it comes off with a vengeance. Now, I want to show you what that's all about. If we go over to the gold contract, and I put the gold contract up here, what you're going to see is that gold is trading at $1,068 US dollars. Now, if you're watching Tiger TV, I'm going to change this into Rand dollars. And if you're not watching Tiger TV, I'm going to explain what we're looking at. Well, what has happened, folks, is that because the Rand, that's their currency, has got so weak in correlation to the dollar. Just in the past 6 months, the Rand, 6 months ago, it was 12 Rand dollars to $1 US dollar. Now it's 15. Continues to get weaker. That's the first part. The second part's more important, though. And what it is this, is that the Rand dollar actually, when gold was at highs at 1900, the Rand dollar was at 6.5 Rand dollars to $1 US dollar. You can see what has happened here. What has happened is that their currency, South African currency, has gone down so dramatically that the cost structure inside Harmony and other South African miners, these people are going to be printing money, and this is why. Harmony, folks, has 27,000 employees, 27,465 as of June 30th. Their expenses are in Rand dollars. They get paid in US dollars. Gold trades in US dollars. The rule in South Africa is that these companies, you have to transfer it back into rand dollars, basically 60 to 90 days. So, and rand dollars, this is just amazing, actually. Gold's at all-time highs. Am I talking about all-time highs? So I would stay like right there. I don't expect this is going to be a one-way trip. I mean, you had the first expansion, you got to 90 cents. You had the pullback, they come back to 75. You get we get the expansion that right now you're over the 99, which is really cool because what happens here on a weekly basis too is that, as soon as you get over 95, man, this thing can run to like $1.67. And the key with something like a Harmony too, folks, this is what's really wild, is that this can be a dead cat bounce, and the rand can come back down, but guess what? The stock wants to go up. So, what had also happened is, Sam, is that if you look at GFI, now GFI, they diversified themselves. They still have South African mines, but they have mines in other countries also. But they come out with their numbers, and they blew their numbers away. They actually made $15 million, and the market was looking for them to lose money. That's when GFI went from 204 up to 265. And I didn't dig into those numbers, but I expect what that was all about was the rand dollar and South Africa, And what also happens in the South African equities is this, is that their cost structure to get gold out of the ground is the highest in the world. There's no doubt it's high. That being said, they mine millions of ounces of gold, not thousands of ounces of gold. So with the rand dollar being that weak, that's the play and that's the trade, man.
Thanks, Tom.
Okay, you have a great one, Sam. Have a safe one, man.
Thank you.
Okay, bye-bye. So that rand dollar, I mean, it's just absolutely amazing, actually, looking at it. And so the aspect, just picture something, that when gold was at the high of 1900, the rand dollar was 6.5 rand dollars to one US dollar. So it's not like they made more money to their bottom line. And that's all that really matters. What is the bottom line? What are you making? Now, what is going on, it's pretty dramatic. It's really dramatic. And there's going to be, well, what you do have is this. What's pretty wild, folks, is that the dollar index, the index itself, looks like it wants to pull back. But you got to remember something. Inside the dollar index, what you're really dealing with is that you're dealing with that's 60% of the euro, about 10% of the yen, and, so that gets to 70%. What has happened is that the correlation, the strength inside the dollar for some of these other countries, Colombia, forget Venezuela. Venezuela's gone to the moon. Colombia, Argentina, the dollar has got dramatically stronger, and it's time to go take a vacation in those countries, because those countries, just like the rand, the dollar is, their currencies have actually got 50% weaker, and it's that dramatic. Meaning, if it was 100 pesos, that's 200 pesos. It's pretty intense. That's the bottom line. Now, what does happen in cases like this is that the ramifications are going to come home more than likely in 2016. And what I mean by the ramifications is that, unfortunately, depending on how long you've been listening to me, a couple years ago, what had happened is that everyone thought the dollar was going to go to hell in a handbag, and the bottom line is the dollar had already gone to hell in a handbag. The dollar was 121 in 2002, gets down to 78. Bottom line, folks, for some reason thought it was going to go lower than that. It's like, you're going to get a bounce out of it. But what had happened is this, is that large companies, sovereign nations took debt out in U.S. dollars. When you take debt out in U.S. dollars, two different things end up happening. You got to pay them back interest in U.S. dollars, and you have to pay back U.S. dollars. Now, what has happened, and this hasn't come home to roost yet, is this, is that as their currency goes down, as the dollar just stays where it is, their currency is going down, what ends up happening with, they thought they got a deal. They thought they got a deal. Maybe they thought the interest rate was 5%. Well, guess what? If your currency loses 50% of the value, what do you have? You have a debt that was 100 million. Now all of a sudden it's 200 million plus the interest. Huge problem, folks. You stay right there, folks. We'll come right back. Dow's up 167, Nasdaq's up 40, S&Ps are up 19. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow right now up 174, Nasdaq's up 41, S&Ps are up 20. We take a look at the NYSE, the volume. The volume's got a cleaner out there, 800 million on the, probably about 750 on the NYSE. On the Nasdaq Composite, you'll come in at about 1.5. We did 1.5 yesterday. And the correlation, folks, inside the SPY, we take a look at the SPY out here. SPY is going to do 94 million. You come downtown, whether it's on the daily or the weekly, both of them, you had some big volume down. Last week, we come down with 957 million shares. Thus far, this week, you're up on 304 million. You go into the NDX 100, that correlation is pretty intense also. That correlation on a weekly basis is that you came downtown with 245 million and you're up on 75 million. What is going to get intriguing here is that as we do come into the end of the year, what you're going to see is that the real question is going to be how much more selling is going to be, where is the money going to come into and go out of? What did get reported out here today is that mutual funds, this totally makes sense too, because when you take a look at the S&P hasn't moved for the year. Prior to this year, the S&P has been up every single year. So I could see, why people wouldn't want to sell at the beginning of this year. I can absolutely see why people would take profits up at these levels, because bottom line is that the risk has been taken and no money's been making. That's pretty intense. That being said, what did just come out this morning, actually at noontime today, is that, let's see. Investors pulled more money from the mutual fund business last week than any 7-day period in the last 2.5 years. Net redemptions were $28.6 billion, which ended December 16th. And I expect what you're going to see is more than likely, you're going to see more of that as we get into the end of the year. Because you got to remember something. The bottom line, inside this marketplace, you're still flat for the year. That being said, the portfolios inside this marketplace, in order to be up, would have some of the high flyers inside of their portfolio. And, some of them will, most of them won't. The reason I'm saying most of them won't, because you have maybe 15 equities that have been up good. Then you have the disasters. And when we're talking about the disasters, I'm not talking about small stocks. You're talking about monster stocks that are very well owned. IBM's in every mutual fund there is. Well, guess what? IBM this year just went from a price point of 180 to 138. I could go on and give you a bunch more of them too. But there's many large equities that are in mutual fund portfolios, that's for sure, because those large portfolios. And, we'll see if, in fact, there's more selling that comes in next week. There's no doubt this week, last couple of days, they're pushing this around. They're pushing around pretty good, too. The gold equities, we're going to need more juice inside those equities. They rejected lower price, could have jumped off the cliff, decided not to jump off the cliff, start going south, and we'll see what type of strength we do get in those. Disney's a mess. Disney's particularly a mess. This is the market's been up, and Disney, with Star Wars, it's down another $120 today. So picture the market's moved dramatically higher, and Disney's gone from 112 to the 104 level. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, fly with it. Thanks for being here, folks. Have a great Christmas, great holiday, and we look forward to speaking to you right back here Monday. Go get them, folks.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is TFNN.